Hey, David Wygant, this is a Thursday. It is August, man. We're heading into September, which to me is pretty much unbelievable when I think about where we've been and what's going on and how we act and behave and man, it's just interesting. I've been diving into a lot of mindset lately. And about a week ago, I got to meet a man named Michael Martin. Michael's there, as you can see him. I saw him on another show, Alex B. the Trader, and I was like, this guy's
Great guy.
So he took my call and we talked for a while. And it's so funny, he lived 5 minutes from where I last lived in Los Angeles. And I was just like, oh man, he would have been somebody to get on air one with and go flirt with women, have fun, shoot the shit, go check out a yoga class, do some meditation, all the things that LA made me happy to be a part of, right?
Getting stuck in traffic.
Yeah, get stuck in traffic, get annoyed, get all frustrated and all this other stuff. So I feel that Michael's like this lost friend from another world. That's the thing about Los Angeles. When you live in Los Angeles, everything is so spread out and so far that you just don't see or meet or connect with enough people. But I feel blessed to be connected. And I've been spending a lot of time listening to Michael's podcast. Now, all of you know my background. I had the 10-minute daily reality check. It was a podcast I did every single day for a couple of years. And I just kind of lost interest and just stopped doing it along the way. But I probably got 1,000 episodes sitting out there. So if anybody wants to hear it, Michael does this 5-minute amazing podcast. And you think it's about trading, but in reality, you can substitute trading for dating, which he does on a couple of his podcasts. He talks and compares it to dating. You can substitute trading for weight loss. You can substitute trading for working out. You can substitute it for anything because it's all mindset driven. And thanks to Michael, and I want to give Michael credit, and then I'll let Michael talk and tell you, this is how Michael's changed my life this week, and I want to give him some credit. I learned something and it hurt. I was at the gym today and this hurt more than anything. I started thinking about last night because I am a very goal-oriented person. I write down my goals. I write down the things that I do. I write down, I journal all the time. And I realized that this is my third year, going into my third full year of trading. So I've done 3 years, right? And I was profitable after a year and a half, minus the emotional outbursts, okay? Minus, the giving the money back to the market after not staying in something long enough. And then, all of a sudden you realize you didn't do enough shares and you're up $45 on the day because you did a 100-share position. And, and then you go and you give money back. And I realized, Michael, thanks to you, and it took a lot of searching, $100 a day I give back to the market on trades that I should not do. Okay, $100 a day. I give them a C note every single day on trades I should not do. And I was listening to Michael's podcast and I was like, oh my God, this is really painful. It's really painful to hear. It's painful to admit. It's painful to feel. And then I started adding it up and I started realizing, because my goal, and Michael talks a lot about goals, I wanted to do 6 figures between my second and third year. And I realized there were so many, when I went through my individual P&L on certain stocks, I'm like, how have I made $25,000 on this stock? But yet my P&L doesn't even show it all together. And then I started realizing the emotional mistakes that we make, right? When we get frustrated in life, and those are big clumps that you give back to the market, like that $43,000 day, just that, that stoop to try to make a little bit, it's like, and you did a podcast, Michael, about, which I love, you just sitting there and you just think this can't be happening to me right now, and it's like, you're sitting there and you're like, holy shit, is this ever going to stop? And it's like, all of a sudden, I remember that day, and I remember
it's like dating.
Oh yeah, I remember going out to my front lawn, and I was thinking, I just lost 43 grand in an hour. Wow, it's like holy shit. And I mean, I'm okay, by it because it's a lesson that you have to learn. And I started writing it down, Michael, and I got to thank Michael because when you take inventory and you think you're not where you want to be, in reality, you actually are where you want to be. It's just the little things are you think what you think it is, it never is. And then all of a sudden I started adding it up and I started realizing, whoa, there's my Land Rover.
Exactly.
There's
Driving by.
right
There
there.
it is.
There it is. There's my, wait a second. There's the money I wanted to give to, the homeless guy on the street. There's my other free time. And you start to understand that your behaviors and what you're doing and how you're conducting yourself are minor changes. And once you're aware of it, because I'm very self-aware, once you're aware of it, you realize, wait a second, I'm actually doing way better than I thought I was, except I am not controlling my human emotions. And I'm basically letting my frustration drive the crazy bus in those moments. And when I did it today, I wrote it down. I started writing it down yesterday and today. I was like, wow, there's a lot of momentum here, Michael. And that's what I want to talk about in life. We have so much momentum towards the things that aren't working, that how do we stop that momentum? And it could be, and everybody listening, it could be about any part of your life. But you want to, once you're so aware of that momentum that's driving you to self-destruction, because it's a mild form of self-destruction, whatever it might be, right? How do you figure and how do you stop it? I know your answer because I've listened to probably 50 of your podcasts, but
thank you.
I want to start there, and I want everybody to listen carefully because this is going to be an amazing answer.
So I'll stick with the financial part. When you're managing risk, either as an investor or as a trader, there's two payoffs to every trade. There's the financial one, and then there's the emotional one. And my mentor is, he was known as the father of systematized trading, using a computer to come up with an algorithm, not like high frequency trading, but just systematized set of rules that would very objectively deploy every day without, finding like, man, I can't wait till Cardano goes to 100 or, whatever, Bitcoin goes to 1 million a unit. It was not like that. It was more very objective. It was forced objectivity. Intentions equal results. So you have your conscious mind, you have your subconscious mind, and you have to figure out which one is in control, right? So when you think about what the two payoffs are on any financial transaction, whether it's an S&P 500 fund or whether someone's buying puts on Peloton and otherwise, you have to know what you're doing it for. Intentions equal results. And as a mentor of mine said, win or lose, everyone gets what they want out of the market. I think they get what they want out of life in that regard too, but you have to know what you're doing it for. Once you can figure that out, you can augment your behavior and become more self-aware. I think there are probably folks who are watching the show, and if you are watching, thanks for watching, by the way, who might be all hyped up on crypto. And they're reading everything they can get their hands on in crypto. Doesn't matter what the token is, doesn't matter whether it's smart contract, NFT, gas killer, Ethereum killer, Cardano, Bitcoin, I don't care what it is. Because they feel that making investments and making decisions about having as much information as possible. But when you manage risk, you come to find out that making investments and making money is not necessarily about accuracy. It's about expected value. So folks who don't know what they're doing come in and say, man, I'm going to study this investing because I need to do 7 or 8 out of 10 winners on average in order to make money, because I grew up in a hierarchical system of academia. Went through kindergarten, went to first grade, second grade, and I had to pass muster and do the basic levels to get to the next level. And if I didn't, I got left back. And it's probably the same for most countries. They call the schools different, secondary school, high school, this and that, college, university, same thing. This is not a hierarchical system. In the end, when you manage risk, if you don't know who you are as a person, it doesn't matter what you know. You are going to look for all the crypto data out there and use it to reaffirm your own ethos. You're not going to look for your blind spots, because you want to be stroked. If you peacock, that's the one outlier side of it, where you're kind of doing it to show off and tell people and go on social media and show off in front of that new girl that you just asked out on a date, thanks to David's help. And or you can be demure and keep it to yourself, right? There's two different ways to do that. So it gets super deep when you think about why people do what they do. What needs are they fulfilling? Because I think, being right and making money are unrelated. So for example, just to put some math to it, you can make yourself the casino and make, as friends would say in slang, you can make bank by being only correct 30 or 40% of the time, as long as your winners are many, many multiples the size of your losers. People who are doctors, CPAs, attorneys, it's hard for them because they're used to being right? They have a terminal degree. It's hard to get any of those designations. You could add CMT, CFA, all of that is super academic. But academic stuff doesn't necessarily work in the marketplace all the time, because you can know everything there is to know and still lose money. Why? You have bad luck and bad timing. So there's so much randomness that goes on. And you internalize that, man, it's a disaster. I asked the girl out, why did she say no? Obviously, she thinks she doesn't like me or I'm inferior. Well, who knows? Maybe she's married. Maybe she just started dating somebody else, assuming that we're talking same sex. I don't have any problem with anybody, he, she, or they. Love is love. You ask the person out, they're in a relationship, they're married, they just started one, they just got out of one.
Exactly.
They might be, assigned female at birth, but they identified now as something else. So you wouldn't know looking at them. It's a very kind of confusing time. So you can't internalize it and say, I'm lacking, I'm less than. I walk out of bed thinking I'm 9 out of 10, but everyone sees me as a 3 out of a 10. So the idea is, if you're managing risk, you have to let go of being accurate. And the hardest part of that is to say, look, if I buy something at 20 and I have a 3-to-1 ratio with 50-50 odds, two things are going to happen. Stopped at 19, or I'm going to sell at 23. And here's the rub. I'm going to be equally happy with either outcome, because this is like anything else. It's a process, and we're not defined by any one particular trade. You're going to do this hundreds of thousands of times over the next 10, 20, 30 years. What do you care about one trade? What do you care about it? So that's the hardest part for people who kind of do, what we do, is to let go of the, I need to be right to be validated. And that's hard, especially if you're educated, because smart people don't like being wrong. They're not used to it. They're used to being right. They know how to pass a test. They know how to write papers. They can type with 10 fingers. They know how to do oral arguments. They have that game down. Unfortunately, the markets are not hierarchical. They're all over the place. And I don't think they'll ever get to be hierarchical. So
when I want to interrupt you for a second there, because I think, don't you believe, or this is my belief, right? I think the market is your best therapist you'll ever have, because it exposes just about every single insecurity you have that you didn't even know existed. And I think it also, Michael, exposes a lot of old programming, right? And I want to get your feedback on that. But you said something here about, you're going and you're searching and you're looking and you're reading about crypto and everything else. And you're right. I can use I'm a health nut, right? So I take my glutathione, I take my vitamin C, I take all my stuff. So to me, I believe in health, and I've traveled during the entire COVID thing. I barely wear a mask. I mean, I wear a mask if you make me wear a mask, right? But, of course, if you go into a restaurant, you wear a mask to get in there, and then you can stuff your face with food, and it's safe to eat, right? Because I love that.
Stupid.
I love the stupidity of it, right? But it is,
it's a ritual.
It's a ritual. And I'm a firm believer in you get what you're seeking. And I love what you said that with crypto. So you're going to get what you're seeking in everything in life. So if you don't believe you're worthy, and you don't believe you're dateable, and you don't believe that you can be successful, then you're going to find information on the worldwide neurotic web, right? And you're going to have somebody who's going to validate and keep your thoughts going over and over again. But to be a great success in anything that we do, I don't care if it's the market, anything, because the market, I mean, I've been an entrepreneur since I was in my, since I stopped acting in my 20s. So I owned a bar. I've been successful making money instantly in every venture I've ever done: foreclosures, bars, cars, coaching, right? I've been successful. The market, oh my God. If someone told me that I'd have 3 years of what I had just now, I'd look at them and go, that's not me. But you know what?
Yeah.
I'm a perseverant person. I look for success. I look for things. And I think that's the big thing that you're talking about, is that people are looking to get their beliefs reaffirmed and
Validated.
spiral. Do we call it a negative spiral, or do we call it a I can't do this type of spiral? Because there's a couple of things. I think the universe gives you what you fear, and the universe gives you what you don't want also, but you think you want something else.
Yeah, there's a lot of mind effing. I mean, the market gives you what you think about all day long. And if you're in fear, if you're afraid to lose money, you're going to have tight stops. You're going to be micromanaging things. You're going to change time frames, thinking that that puts you more in control. Worse, you're going to try to day trade, right? As opposed to letting time and money and then leverage work for you, right? Let the forces of supply and demand work for you. You're going to impose your will. So, you know, LA, you know, the cabin, there's a bunch of 12-step meetings. I've given away 1 million cakes to my sober friends to honor their sobriety. And I'd sit and listen to the meetings because, anyone in the world can be your teacher.
Anybody.
You're only as sick as your secrets was a big one. And the other thing is that, like a lot of things in life, because the market is a living, breathing mechanism, you actually have a relationship with it. So how you handle money is no different than you would have a friendship, a romantic relationship, a sordid relationship. It doesn't matter to me what your favorite flavor is. But I promise you this, the market, if you don't know who you are, it will amplify your worst character defect. And that's absolutely the truth. So that's why I say, know yourself. If you don't know who you are, if you have no self-awareness, if you don't know what makes you tick, and it's not about fear and greed. A lot of times it's about ego. A lot of times it's about dominance. And I'm going to show you, I'm going to teach the market. We have this thing called revenge trading, right? So
yeah, I've done it.
Yeah. So, I mean, that's one of them that I haven't done. I've made every other dumbass mistake possible, but it took me, just to give people context. Now it's 34 years of experience.
Oh, wow.
Wealth management for yourself, not for like, if you work at a wirehouse, learned behavior, right? Now this'll certainly smack some folks upside the head, and it's not meant to, because I'm not a controversial type of person. I'm not trying to be that way. But if you look, you could look at the middle class, you could look at the upper class, whatever you want to call it, the 1%ers. If you just looked and didn't know who they are, one thing that you would observe is different behavior. And the controversial part is to say that the middle class is the middle class because they do middle class things. And it's not a dig, because you have to learn it. I come from a working class background. My parents don't have a college education. They're both Depression era kids. So I had to unwind a lot of the things that I learned from my environment, because your environment shapes a lot of who you become. So you have to really make sure you're aware of what you're doing and why you're doing it. Because most times it's not about fear and greed, right? There's always a deep emotional need that's getting fulfilled. We're pleasure seekers, right? We're pack animals, we're pleasure seekers at the end of the day. So what are you doing it for? And if you have a big winning trade, who's the first person you call? Because the feeling that you get, there's your answer right there. If you lose a bunch of money and you avoid the phone or social media or whatever, what is that telling you? And you can be your own best teacher in that regard. But what you don't want to do is internalize it and think that you're less than. It took me 4.5 years. I went to an Ivy League school. It took me 4.5 years still to learn the behavior that I needed to learn to act consistently.
Wow.
Right? You think of thoughts, feelings, actions. Actions are behavior. Behavior predicts where you end up in life. Doesn't matter whether you're trying to put on 10 pounds of muscle, whether you're trying to get a black belt in jiu-jitsu, whether you're trying to learn how to do hatha yoga, eventually become a teacher. You have to put the work in. You have to do it every day. That's what makes it consistency. You're not going to watch a YouTube video and learn jiu-jitsu.
No, or be a doctor. That's usually, Michael, that used to be, I used to tell people all the time, they come to my weekend seminars, right?
Yeah.
And they would look at me and they would say, oh man, how long is it going to take me till I can become fluid and really connect deeply with women and men and everything else? And, will I be able to have it all by the end of the weekend? And I look at them and I say, no. I said, what I'm doing, what I do is based on years of consistency, years of work. I mean, to become an intuitive being and to become somebody who's able to read people everywhere. I mean, I started this on the Upper West Side, at a college. I would smoke a joint at like 9 o'clock at night. I'd put my Walkman on, right? and I would walk the streets of Manhattan watching people's mannerisms.
Yeah.
And I would react to their mannerisms. And I realized the reaction I was getting was a reaction of like, wow, this person understands me. They're relating to me. So I would tell people this. I said, there's two things in life that people think they can be instant successes in: the stock market and the dating market. It's no different than wonder why when I wanted another challenge instead of just coaching men, right? Why I want another challenge, I picked the stock market because the fact of the matter is they interrelate so well, because there is no other place. You can't walk in, you or I cannot, we can't have a conversation like, hey, Michael, man, let's meet in Oregon this weekend. You know, I heard there's like this great convention. We can learn how to be a brain surgeon. Oh, cool. I always wanted to be a brain surgeon, right? You can't walk into any weekend seminar. You can't watch 100 hours of YouTube videos. And Malcolm Gladwell tells you it 100 times. It's called the tipping point, right?
Yeah.
It's 10,000 hours. And I have figured out I am right about at 10,000 hours in trading right now.
Yeah.
That's why when it comes down to trading, you know, I see, I don't, you know, and I day trade, you know, and I see things, right? Like all of a sudden I see like, oh my God, Microsoft's going down right now. And I see it right then and there. Now, if I don't take it, I write it down, right? I write it down because that's what you have to do. You have to train your brain. But I see things as they're happening. But it took me 3 years and 10,000 hours. And that's what I used to tell people all the time. If you want to be amazing at something, you've got to put the hours, the time in, you got to get your ass handed to you. And I love what you just said, 4 years. I mean, Ivy League education.
4.5.
4.5.
That's 6 months were brutal.
Oh, it's because it's so brutal, because you have moments where you're like, whoo. I remember, you know, the day I made 10 grand, right? I was like, yes. And then I decided to swing it, which is not my personality. And I woke up the next morning, you know, how much that 10 grand went down to? 2. And I was just sitting there going, oh.
Been there.
You know what I mean? It's like, and you have to deal with your emotions and deal with all this stuff. And that's what I think people don't understand, is that to get really good at anything in life, you have to be willing to become so vulnerable. You got to be willing to get your ass handed to you. You got to be willing to lose. You got to be willing to be embarrassed. You got to be willing to get rejected. You got to be willing to go get therapy and help and everything else. You got to be willing to invest time and money. And I think that's a big thing. And I love what you said, 4.5 years, because that here you were Ivy League educated, getting your ass handed to you in your 20s.
And 4 of my teachers had Nobel Prizes. Like you one of my teachers, Robert Mundell, invented the euro currency.
Oh, wow.
Hello. So, I mean, he won the Nobel after I had, you know, met him and taken a couple of classes in international monetary policy and then international trade. He just passed away, rest his soul. But if you think you're going to read a book or take a class or go to Udemy or do this and that, and you're going to take a thumb drive and someone's going to put it here and you're going to infuse all this wisdom, you're going to go out and you're going to make money, that's the worst thing that can happen. Because what you're trying to do is calibrate your emotional intelligence with your behavior. You know, what can you learn from the experience of doing it? Because that's where the money is made. 2, you make and lose money not by having sniper entries. That is epic bullshit. You don't need your hotkeys and your mouse and 14 monitors. What you need to know is position size. You make and lose money by the quantity of what the instrument is that you're trading is in your account. And coincidentally, you don't typically optimize that. If you have 1,000 shares of everything, I can assure you you're doing it wrong. So you need to know what you're willing to risk. And I say willing because risk is not a bad thing. You don't get reward unless you take on risk. The question is, you need to set up yourself and have a diet of good risk that you know how to handle, risk that you can feel, risk that you can know from a 4th grade math standpoint, because the math that you need here doesn't really get, you know, beyond 4th grade, 9th grade math, a little algebra, but nothing crazy. You need to know how making and losing money feels, because you know what it felt like to study for that test, write that paper, hand it in, you get the grade back, it's a C, and you're like, my God, I read 4 books, I have cited references, and I didn't make my points. What the hell happened here? Or, you know, I got a 74 on the test and I studied all week. My approach was wrong. Did I not focus on the right things? Did I answer too many 2-point questions and not the big daddy 5 and 10-point ones? So you have to be very introspective and see, you know, what are you doing it for? I always use Jim Cramer as an example because he's a terribly bright guy. He knows enough information on 3,000 or 4,000 stocks off the top of his head.
It's
And if
wild,
you
isn't it?
subscribe to his action alerts, which is probably great research, he's going to send you a list of names. So say there's 15 names on it. How do you know which one to get? And then how much of it to buy?
Yeah.
And then if you feel Kramer is smarter than you, and he probably is smarter than me in the equity space in his left pinky, more than I have in my brain, but I can't delegate the responsibility of my making money to somebody else's newsletter. And I know the folks on Mad Money and Fast Money and all that. I know the people, I grew up there and they're very, very bright. But ultimately, if a person wants to make money by managing risk or putting their capital to work in the market, whether they're going to invest or be a little bit more active, there's no judgment. One is just as good as the other. And yes, you can be a market timer. That's your responsibility. If you make money, it's your fault. If you lose money, it's also your fault. We live in a paradigm of personal responsibility. If you're afraid to go ask that person out, he, she, or they,
It's your fault.
that's on you. That's
Right.
on you. You have nothing to lose. What they could say is no, it's not a good time. There's about a million reasons why it might not work. But if you don't ask, you don't know. And I'd rather go get the definitive no. I used to say this about having leads when I first started on Wall Street, and you'd have a little box of all your
I love
index
the
cards.
definitive no.
Give me, if I had 20, what I thought leads were, give me 19
Yes.
definitive no's and 1 yes, then 20 maybes. Because at least
Yeah.
I know where I stand. Then I can manage my energy and my effort. I don't want to be sitting there wondering about the 20 maybes. Give me the black and white of it, cut to the chase. Then we can move on. I could build. I could learn from my mistakes. Because so much of making money in the markets, again, isn't, look at Soros, right? I mean, he knew how to do one thing very, very well. Yes, he leveraged his account. I know those guys very well. George and Jim Rogers, Victor Sperandio, Quantum Fund. They didn't have an ounce left of buying power, and they did that every day. If they had buying power, it was
Every
work.
day.
It was at work. They never had any free cash laying around. Whatever they could borrow against, they did. They used futures and equities in the same account. And if things went up and it created new buying power, they put it to work. And if they came up with a new idea that they needed to get into, they'd have to figure out what would they let go of in the portfolio to add it.
Wow.
But they were levered for 10 years straight. Every day they were levered up to the nth degree. And that's how you make 38% compounded after fees in Netherlands Antilles, which has no taxes, right? So I believe you get what you think about. So you have to speak to yourself nicely. Don't speak in terms of what you don't want. Speak in terms of what you do want, and say it in the present tense. I used to say, I'm going to be a world-class trader. There's a big problem with that.
That's future tense.
And future doesn't exist.
No.
Today is Thursday and Monday doesn't exist. I can understand what Monday is theoretically. I can see it on my freaking Phoenician calendar. But all I have right now, especially in my management of risk, is the ever-evolving moment of right now. And right now, and also right now, and all the other nows that are going to follow. I can't anticipate things being better Monday when I'm losing money today. So I have to subvert my ego and say, again, I'm long at 20. I don't know. It doesn't matter what the name is. You have to be promiscuous. You have to be a trading whore. You cannot be loyal to names because it's Tesla or it's Netflix or it's Cardano or it's Bitcoin. If you feel that way, you've lost your objectivity. And you have to understand that you'll be, not you, but people listening until they get trained, they're their own worst enemy. They will lose more money because of themselves than the market. Market just is what it is. Market doesn't care if you own Disney. Doesn't care. Disney doesn't care if you own Disney. Has no impact on them whatsoever. They've already IPO'd their stock. So the initial investors gave them money. I think it was whatever, 1965. They got that money. They grew it. So now the shares are trading between other buyers and sellers. It has nothing to do with Disney. Obviously, if it goes up, Bob Iger and the crowd make a lot of money because they get compensated, from stocks and stock options. But this should be very, very empowering for the listeners that they are in control. And it's if they focus on it and they want to get good at it, they can, but they have to do it. You can't internalize it and make it a theory. It's about execution. We get paid to execute in the markets. You don't get paid to know stuff. Knowing stuff doesn't mean jack. I like to say the story about New York because people don't really understand. There's lots of tongue-in-cheek things about being a New Yorker. I identify still, after being here for 20 years, I'm still culturally a New Yorker. And they used to say, if you can make it here, you make it anywhere. Do you ever ask yourself why that is? And it's not necessarily because there's not a lot of opportunity. It's not because there's unlimited opportunity. It's because culturally people hold themselves up to a different standard.
Yeah.
And the standard is you have results or you have excuses and you're a loser. And if you have enough people who are walking around you saying, I can do that, I can do this, I can get a black belt, I can do that, but they never go actually execute. Those are the folks who don't get invited to the party. You can not even tie a knot. You can wear different socks. You can have socks that don't match your shoes and shoes that don't match your belt. You don't have any custom clothing. It doesn't matter. But I promise you this, if you can execute, you're going to be one of the first invites. And you'll build a reputation as a person who can get stuff done. So you can do that for yourself as a person. You just have to set your mind to it and say, right now, I am a world-class trader. Why was that? Why could I say that? Well, because I do the things that world-class traders do. And world-class traders do something that's very, very different from the mindset of the folks who are trying to do this at home and they're at the amateur level, and you got to start somewhere. So it's not good or bad. It is what it is. Amateurs and newbies come to the market with dollar signs in their eyes. They're like, I'm going to take my money and turn it into this, that, or the other thing. They trade too much. They trade too frequently. They have concentrated positions, which means they probably have 2, 3, 4 names that take up 100% of their capital, or worse, they lever and they use borrowed money, Reg T, day trading, buying power, and they're not diversified. And the problem is that that's what gets you killed. Trading too big and trading too frequently. The professional trader who wants to do this 10, 20, 30, 40, 50 years, one of my good friends and partners have been trading for over 50 years. How do you get there? You don't lose. You have to keep your losses small, which means no matter how strongly you feel about your investment thesis, no matter how strongly you feel about the name, no matter how emotionally invested you are at your buy price, which is now above where the thing is currently trading, you have to get out. Amateurs focus on making money. The professionals focus on playing superior defense. You'll never hear that on TV. You watch TV, they'll have guests comes on. They say, hey, Mike Martin, what do you like here? I like this, that, or the other thing. They never ask you how much to have in the portfolio. What's your optimum position size? And if you get in right here, right now at this price, when do you know you're wrong and what do you do about it? And I will share for whoever wants to take this on and do it, you need to understand that consistent position sizing is what's going to make and lose you the money. It's not about the accuracy. It's not about the sniper entries. Risk and how much to risk. And after many, many attempts, hundreds of thousands of attempts, what is your accuracy rate? Because it's not good or bad. I have a student that I work with, and his accuracy rate is 20%. He's wrong 80% of the time. And he makes 30% a month. I've seen the numbers. You have to have a special constitution to do that. You know what I mean? So what do I mean? Let me give you some help. If you have 100K, most people try to break up their money into, they take the circle and they make the pie chart. Well, think about having your money and you break it up into what we call 1% risk units. So no matter how much capital you put to work, from your number of shares multiplied by your entry price minus the exit price, you're going to lose $1,000. Doesn't matter if you put 35K to work. Worst case, you're going to take 34 back. So we call that a risk unit. What is your risk unit? Now, you can be smarter because when you have bigger risk units, your equity is going to move like Uncle Vinny's EKG after a meatball parmigiana and 3 liters of Coke, right? It's going to be all over the place, right? So you want to figure, what do you want your equity curve to look like? Do you want it to be smoother or do you want it to look super jagged? Like Permanent Waves, the Rush album. So then you say, okay, well, I need to break up my money because if I am wrong and I don't know what I'm doing, I want to be able to stay. This is not a sprint, it's a marathon. You want to be able to come back tomorrow to make your attempts so that you can get the emotional and the psychological feedback from the marketplace to get in line. That's going to take attempts. That's going to take money. So your money is really points in a video game. It's all Space Invaders and Mrs. Pac-Man. Then you say, oh, I want to be smarter. I'm going to break my money up into 400 units. So now I'm going to risk $250 for in a $100,000 account. That's 400 risk units. So I could be wrong so many times in a row and still have a gigantic, I could be wrong 4 times in a row and I still have 99% of my capital. This is the way professionals think. They don't think about taking, $33,000, pieces of equity across 3 different names and then borrowing money and then putting it all on without any type of tactics. And worse, they don't even know where they're getting out if you're wrong. What's the price? Then tactically, do you know how to enter what we call a protective stop order below the market so that if it trades at or through that price as a circuit breaker, you get offset and you preserve your capital.
And you have to respect it. And you can't.
You cannot, I did a show on that. You cannot renegotiate with that
No.
protective stop price because you have strong feelings about where the market should go.
And it usually goes back up and makes money, but you know what?
It could.
If it doesn't, you were protected. Yeah, I mean,
that's the goal. Emotionally, you can take the emotions out of it if you put the orders in and then trust that they will get hit. So put your orders in, turn the screen off, and go do whatever it is that you did to get the money in the first place. Don't sit there and try to micromanagement and steer it like it's a drive off the first tee and you're kind of waving the thing over so that it draws and gets overspin. It's too late. The ball's in the air. So I believe, though, just like I don't believe in cancel culture, I believe in redemption. I feel like anybody can do this, but they have to listen inwardly and they have to be brutally honest with themselves. They have to be brutally honest with themselves and say, right or wrong, making money, losing money. Losing money is no different than asking somebody out and getting rejected. It doesn't mean anything qualitatively about you or your intelligence, And that was hard for me to learn because I kept thinking like, man, all my self-esteem is, it took me, this is 4.5 years. It took me a long time because for many of the circumstances that I was in life, I was always one of the smarter people at the table, at least academically. But that doesn't mean jack in terms of making money. Here's the problem, though. My whole self-esteem was tied into my intelligence. It was who I was. I was the smart guy. I was the Ivy Leaguer. And, I never said that about myself, but I certainly heard it. And it gave me a big stroke to my ego. So I had to unlearn all that. I had to unlearn and say, that doesn't matter. Designations. I believe in education. I read books. I don't even have cable. I read books. That's what I do. I feed my brain. Very little of it can I actually use in trading. Lastly, I'll say before I shut up, in that if you look at trading as 100% of effort and this and that, what goes into trading, it's 4 parts trader psychology and emotional intelligence and only 1 part tactic. So that means 80% of what they do is self-knowledge. And very little of it is actually tactical. Not terribly difficult tactically. You add risk and you remove risk. The key is, how much risk are you willing to, how much of your capital are you willing to risk in order to be there for the miracle? I got to risk 0.5%, and I'm either going to lose that 60% of the time, and then 40% of the time, I'm going to make 1.5 to maybe 2%. So when you think about it, you become the casino. That doesn't mean you have to be reckless and, hell-bent for election kind of day trader either. You can buy and sell over several weeks. You can do this and that. You're just really trying to protect your capital with something a little tighter than an open-ended strategy of liquidation, which is what investors do. Investors put money to the work and they kind of leave it for a rainy day. Someone who's trading is going to offset that risk. Why does it matter? I don't know. When I was starting out IBM, which they called Big Blue,
I listened to that. I listened to that podcast. I love that podcast.
Big Blue chip. Yep. It went from 140 to 40 and it eventually clawed its way back, but it took 10 years. And if you think of finance can be defined many, many ways, applied microeconomics, but ultimately you can think about it in this. And I know there's probably a lot of ways and probably a lot of people who are much more smart than me listening into the show. Ultimately, though, cash has time value. If you give me $1 today, I can turn it into $2 rather than getting $1 in a few months' time or next year, right? Because I'm in control of it now. I can invest it. And you invest money to outperform cash, right? You know that $1, I was just at lunch with somebody at Stonehouse, which you would remember.
Oh, yeah.
And we were thinking, like, when our parents were younger, if you had $1, you could buy 20 different sodas, 20 different Cokes, because they were a nickel. And if you had that same dollar under the mattress, you pulled it out today, now you can't even buy a unit of soda.
No.
You can't get
Can't
one.
even buy a bottle
Why?
of water. Can't even buy a bottle of water.
Right. And that's inflation. So the
Yeah.
idea is that you make investments. And I don't care if you collect NFTs, if you buy Jean-Michel Basquiat's, rest his soul, I loved him, or if you collect wine. Your goal is to outperform cash, because if you look at inflation being 4%, the dollar that you have today is going to be worth, purchasing power wise, 96 cents next year. So you need to put your money to work so that you can at least have a dollar or the same type of purchasing power. Otherwise, you're losing wealth. If you're super clever, you can maybe get to $1.04, $1.05, right? Because that's what the wealthy people are more concerned about, is not necessarily, you know, look, there's no difference. If you have 50 million bucks that you go to 60, there's not a lot of difference there. It's 10 million. And as an ex-golf caddy and waiter, it's going to be an enormous amount of money to me on some level. But from a quality of life standpoint, there's really no difference. There's not too much that you can't do at 50 that you can do all of a sudden at 60. Now, of course, if you're collecting Gulf Streams and you want to buy $100 million houses like Bruce Kovner, knock yourself out. That's a different model. But from a quality of life standpoint, most of the folks are trying to outperform cash so that they can keep their level of wealth at least at a certain balance. They don't want to lose purchasing power. They don't want to lose a level of wealth because of negligence, or they were afraid to take risk. There's a point where if you know what your goals are, this is how in control people can be. If you know that you think you want to set a target as 24% compounded a year, every 3 years, you're going to double your money. So then you could break it down on a monthly basis and say, okay, that's roughly 200 basis points a month. Now, 1 month you'll be up 6, next month you'll be down 2, the next month you'll be flat. So it kind of averages out, right? But you can do that. So then you could say to yourself, okay, if I know I'm right 40% of the time, and when I win 3 risk units. When I'm wrong 60% of the time, I lose 1 risk unit. You can reverse engineer the whole thing. And then you can calculate what we call portfolio heat. How much risk do you need to have in your portfolio in order to hit your goal of 24%? Some people are so afraid of risk, they don't have enough risk on, they're never going to hit their goal. And that's not a bad thing. They get to recalibrate it and say, you know what, I'm more of a 12% person. I don't want to have to babysit all these names. Or they can look and say, man, for how well I'm doing in my tactics and my technique, my self-knowledge, I can actually be a little bit more aggressive. Maybe I'm going to shoot for 36%. So I double my money every 2 years. So you're in control of all of that. It's very empowering to know that. You just don't know the rules. I didn't know them either. I had to learn them. And it came with losing money. That was my tuition. My trading losses and the emotional duress that I was going through, was my tuition. But like a lot of things in life, if you have persistence and you have determination, if you have a good attitude, I also want to throw in a good mood. You can say, I'm going to persist, I'm going to be determined. But if you're a brooder, I don't know. You ever see Richard Branson complain or be a brooder?
Never.
I haven't. Have you ever seen Jeff Bezos act that
Never.
way? Right. So find
Tom Brady. You ever see Tom Brady brood?
No. Winners don't do that because there's no time. We don't have enough time on planet Earth for that nonsense.
They get angry in like, if you take Brady, right? Because I'll have moments like where I'm just like, if I lose 3-4 in a row, I'll be like, oh, like this. I'll get up, I'll go, oh, walk around the room, take a deep breath, sit back down and go, all right, let it come to me. And the same way you watch Brady on the sidelines will throw an interception. He'll get angry at the receiver. He'll be like this, right? He'll get in his face. And then you see him 30 seconds later, calmly ssitting down, reviewing the iPad, right? Yep. Going through and relearning. This man's 40, what is he going to be, 45? Is he 45? This man's played football for 23 years. He will go and review what happened to order to learn with it, because we can have, and that's true, we can have our emotional outbursts fast. You have to have it fast, and you got to calm yourself down really fast, and then you got to take a deep breath and then go, all right, what can I do different? Because you want to get your wits about you as fast as possible, because life, you've been saying it, life is just a game. And it's funny the way, if you look at the stock market, all this is a game of colors and numbers and colors and lines, and that's it. It's the emotions that we have in life that dictate if we're going to be successful or not, if we're going to be be successful at jujitsu, if we're going to heal our bodies, if we're going to, lose the weight, if we're going to be healthy, everything is about here, because the technical side of it, and I love what you said, a friend of mine told me this, he's a day trader, makes a lot of money. You know what he says? He goes, do you remember in grammar school, Michael, do you remember we would like draw the lines and then put a 5, on 5, put the line across it, right? He goes, you're only allowed to lose 1 bar, and you try to win 2 to 4 to 5 bars, right? Depending on what time frame. So he goes, just go like this on a piece of paper at the end of the day, right?
Yeah.
Put lines across, and what do you see? You see a childlike game, 24 bars to 7. Wow, wait a second. 7 losers, 7 losing bars, 24 winning bars. He says the process and everything else in life takes care of itself when you allow, and I love what you said, because you said this, when you allow yourself to be a part of this and you allow yourself to go through all that, because the tuition that we learn in life is the pain, is, if I teach a man, you got to go approach 100 women. You're going to get rejected 99 times. Just be prepared for it, right? But the more we persevere, and there's no time frame, and I love how you just said it there, you literally said it in these words, there is no time frame in life. There are some people who get it and they're like wonder kids, they're like, they can go trade stocks and they're 19 years old and they made $1 million in their second year of doing it. Wonderful, right?
Yeah.
And there are other people who get their ass handed to them for 7 years, and then all of a sudden it's like one day it changed. It didn't change in one day. Nothing changes in one day. It's all the hard work that you put in for the 7 years, for the 3 years. It's the dedication that you have. And I think that's what's lacking in so much of our culture nowadays, because we've been marketed so much about everything. 3 easy patterns, 2 easy this, 14 minutes to get your good abs. You can
How to make $1 million a year with working 30 minutes a day.
Oh, I mean, sign me up.
I actually have to go because I'm going to one of those seminars in 6 minutes.
Are you really?
No, I'm just being facetious.
Oh,
I mean, everything is intentional. If you put your mind to it and you take the action, I believe that the world and the universe kind of conspires to help you out, even if you don't know the tactics and how to do it. That's the easy part. I remember I use this in my own coaching quite a bit because I meditate.
Me too.
I came to meditation through Hatha Yoga, and I lived close enough to the self-realization, the Lake Shrine and Self-Realization
you together all the time.
Yeah. And so I remember reading a story about, the Beatles in around the mid 60s. They took up TM, Transcendental Meditation, Maharishi Mahesh Yogi, and the Beatles, with their popularity, were going to help the Maharishi expand it and bring it to Europe, North America, etc. And he was asked at a news conference kind of a deal, all this traveling and staying up and the teaching, like meditation isn't actually like a capitalistic endeavor. Where are you going to get the money for all of this? And he said, wherever it is right now. And so it hit me broadside, and it said, like, for all the trading gains and the investment gains that you want, the money isn't going to come out of thin air. It's actually already in the accounts of the people who don't have discipline. It's the people who are relying on stock tips. It's the people who are relying on newsletters. It's the people who don't want to take responsibility for their own actions. So when you can get to that spot and you take the action, you're trading against people who are doing it on their own volition. And so it's not to be mean, and no one's holding a gun to anyone's head. They're trying to do things as well. But you're dealing with a group of people, the majority of them, who don't have the discipline, who don't have the perseverance, who can't take consistent small losses. So by doing a little bit of work, you actually skew the odds in your favor by a factor of 20, just getting out of the gate. I think what happens, though, is that people see this. It seems like a mystery. They get psyched out, so they don't even start. And now the opportunity cost starts to add up, because although it's super safe to not do anything, not take any risk, you're not making any growth. Growth leaves stretch marks. You got to put yourself out in traffic, right?
You do.
Do what you learn from asking out the 100 people and getting rejected 99 times. I mean, you got to have some super bad luck to have 100 people on a list and to have the first 99. What's the odds of that, right? If it's yes or no, so it's 50-50, you can calculate the odds then of what the probability of having the first 99 people say no for the 100th person to say yes. Here's the upside, though. how much can you possibly learn from being in those 99 attempts? It's got to be an astronomical, almost not quantifiable kind of not self-knowledge, right? You find out after 3 or 4 that everyone's lonely. People want to be in relationships. And worst case scenario, sometimes the people will at least hear you out. So then you're like, okay, I'm comfortable in my own skin. This ain't so bad. I'm going to keep the conversation going. Hey, can I get your number? You want to meet for coffee? There's a million different gimmicks and ruses that you can use to break the ice. And when you try it, you find out that it's not so bad. There's really nothing to lose. When you think about it, what is there to lose? There's nothing to lose. What are you going to look stupid in your friends? Well, don't do it in front of your friends. Go out and do it by yourself. Look around, make sure no one's looking, then go up to the person you're interested in. Like, it's not that hard. The key to making money, though, is to say, look, I have a circuit breaker price. If I buy at 20, I'm out at 19, and that $1 multiplied by the number of shares that I have equals 0.5% of my capital. So I can be wrong 200 times before I vaporize my cash. Then you get to fine tune things, right? You think about, Navy snipers, right? We don't live too far from Coronado where the SEALs train and all this kind of stuff. And you got snipers and scout snipers. And you have one guy standing there with the thing, and the range is this, the wind is that, the temperature is here, the barometer is that. You got a million different adjustments. Then they still have to wait. So I feel people can do that with their money. The key is knowing up front, how much are you willing to lose and pay in a form of what we would call a tuition, financial and emotional tuition, in order to achieve that skill. Because now that's a skill that you can teach for future generations. You talk about the Kennedys, Joe Kennedy, the father, he set all those kids up to win because he knew the rules of money and he took the action. You don't have to like the Kennedys. It's not the point, but it's behavioral, and anyone can learn the behavior. But the key is to not do things, don't act out of emotion, don't act out of ego, and just realize that if you're getting it 40% in terms of accuracy, that's where the pros are at. They're not right 100% of the time. That's not what pros do. They're not picking winners. They have some winners, but the majority of them lose. If for no other reason, it's just bad luck or bad timing.
You can't control. It's so interesting. I want to share this turning point because I think you'll appreciate the story. I remember, in life, our greatest growth is when we sit in discomfort, and it's almost like if you're trading and you're used to getting out too fast, you should put duct tape around your chair. And you should not, if you've made an agreement saying, I'm going to let the 8 EMA take me out, and I'm just going to ride it as long as I possibly can. And I'm not, and once it turns on the 2-minute chart, I'm going to go to the 5-minute. I'm going to let that 8 take me out. And then once it turns there, I'm going to let the 15 take me out. And like, you could be in duct tape all day long, right? But that discomfort is how you grow. And I remember it was my birthday, 1987. And at that point in my life, I was 25 years old, right? 25 years old. And I was good, at meeting women. I mean, really, really good. But I was also, a typical type A, I wouldn't say perfectionist. I would say more of a typical type A, want to be successful and don't like opportunities passing me by. Mm-hmm. So I made an agreement with myself. This is my birthday. The first beautiful woman that I see, I'm not going to make an excuse. I'm not going to make a story, because it usually would take me a warm up, right? 2, 3, 4 women before I finally went and approached the one, right? And if you think about, you can relate this to every aspect in life, like to trading. If you see that first move in the morning and you're like, oh my God, this is so amazing, it's so beautiful, and you don't take it, you watch it and you realize that you were 9:40 in the morning, you could have gone to the beach. There was your money for the day. You were done and gone, right? So I remember I'm walking down 80th, right? So I lived on 80th in Amsterdam. So I'm walking towards H&H Bagels. And, back in the 80s, those things were still 50 cents a bagel. They're probably like $8 a bagel now, right?
Been there a million times.
Oh, they're so good. So here I'm walking there, and coming out is not just any girl. I mean, we're talking a 5'10" Ford model, absolutely like just the universe just put just about the hottest girl I've seen in probably a week, right? And you know, Manhattan is just crawling with it. And I'm thinking to myself, are you kidding me? Really? I mean,
Yeah.
oh, okay. All right. I made a commitment, right? So she's walking towards me. She's got a bag of bagels. And I just say the first thing I saw in mind, I look at her, I go, hey, you brought me breakfast. She just spit it out. I go, you got sesame or poppy? She looks at me and she goes, I got both. I said, oh man, I said, I'm more into sesame than poppy. She starts to take it out and she hands me the bagel. And I go, just not going to put cream cheese on that, right? You know, because now I'm feeling like, wow, this is actually, I'm holding my word, right? I'm feeling invigorated and attached to life. And she starts dipping it into cream cheese. And I look at her and I go, no, I'm going to go buy some bagels right now. And she goes, no, she goes, come on. She goes, let me give you breakfast, right? I went out with her that night, hung out with her, you know, for about a week or two, and realized, of course, this is, you know, the 24-year-old mindset or the 25-year-old mindset, right?
Yeah.
Well, if I met her, why should I date her? She wanted to date me, I mean, be my girlfriend, you know, and everything. And I'm like, well, why should I date her and be a girlfriend if I can go and do this, like, you know, if I can go do this every day? And that's what started my addiction. And really, that was the beginning of the business that I had. You know, I didn't teach anybody then. I was bartending at the time, but that started me on this major role because I remember when I was talking to her, Michael, my lip was quivering so much. I thought she must have seen it shaking. I was flushed with sweat. I mean, I was just like turning brick red. And it's not like I haven't talked to beautiful women before, but it was holding yourself accountable in a moment of discomfort and getting past it. And I believe that that is always, when we don't hold ourselves accountable, no matter what we do, if we go to the fridge and we have a Krispy Kreme donut, you fucked up your whole day. You know, if you go and you're trading and you don't take that first move that you've seen thousands of times before, it really sets the tone for the entire day. I feel like your entire day, when you don't commit to the discomfort and go for it, the whole rest of the day, you're almost like, it's like you're swimming uphill. You know, you're trying to make up, you know what I mean? You're trying to you're like a salmon trying to go and swim against the current all day, because once you don't hold, because we wake up as human beings in the morning, or we say, today's going to be a great day, right? And then the minute we don't hold ourselves accountable, the rest of the day is a day of making up for not committing to our word. And I remember that feeling like it was yesterday. And it's a life-changing thing, because I think the greatest way to success is to hold ourselves accountable right in the most frustrating, painful moment that we can possibly have, and push ourselves out of our comfort zone in that moment and say, what's the worst thing that could happen right now? She could walk right by me and it wouldn't matter, right? Or the trade will get by me and there'll be another one. But when we don't step up to the plate, we don't commit to our word, and we don't have the day we're supposed to have.
So I'm just writing some notes down. It's like, I'm a very intuitive person, right? I can intuit. A good book, if you want to kind of think the way Michael Martin thinks, is to read Extraordinary Popular Delusions and the Madness of Crowds. So much of trading is a lot like poker. You're going to have
popular illusions.
Extraordinary Popular Delusions and the Madness of Crowds.
They're two different books, right? The Madness of Crowds is a different book, right?
It's all one book. Charles McKay, you can get it. It was written a long time ago, and it talks about tulip bulbs and this and that. What you find is that history repeats itself. It certainly rhymes. I could see, in a judo kind of way, crowd behavior. Just like a murder of crows and a school of fish, I can kind of see herd mentality in the markets. So I know a lot of times to be more fearful when everyone feels like it's the roaring 20s, and to also be a lot more greedy when everyone is like, man, the market's getting killed and, you know, things are going to go down. It's never going to come back. So you can learn a lot about being a contrarian. I also made up in my mind that I'm never going to have regrets. I'm going to at least make an attempt. I know exactly how much I'm going to lose as a percentage of my capital. That's another thing that pros do. They don't think in dollars. They think in terms of percentages. And I'm not going to have regrets, because I know if nothing else, if I put on a trade and I lose money, I'm going to learn from that experience. And that gives me metadata, meta knowledge on myself
Right.
and on the art of it as well, because there's an art and science to trading. I don't want to disagree with the host who was nice enough to have me on the show, but when I think about you asking out this woman and hitting on her and this and that, you did it. Doesn't matter what it looked like, dude. You did it.
Did it.
And there were a million people who walked by, maybe hetero males, maybe gay women. Doesn't matter who they were, but they didn't make the attempt. You did. Now you spit on yourself, you peed your pants, you were sweating like you're walking into confession, but you did it. And no one can take that away from you. You mustered it up and you did it. So the different word that I would use is that you weren't in the feeling, you were with the feeling.
Ooh, I like that.
Because in my world, my feelings teach me. They're not antagonizing, they're advocates. And if you do this enough, you get to calibrate your system so that when you feel that thing in your body, when George Soros knows when to sell, he gets a pain in his back. It's like a protective warning. And my mentor, Ed Secoda, used to say something similar, is that your feelings aren't there to antagonize you. You have to make friends with them, because a lot of times, because of your perception, right? We can see, we can taste, you can hear, you can feel, you can develop a sixth sense as well. If you do, this is the benefit of experience. You get to see that your feelings can oftentimes be a protective warning. So when you're full of hubris and you're making money and you're like, man, I'm going to double down, you say, whoa, wait a minute. Last time I had this feeling, it didn't end so well. So I got to go to school on myself. And that's what I've always tried to teach myself, teach my students, in that you have to start with a goal. If you don't know what you're doing it for in the marketplace, it's like that old Pepperidge Farm commercial. If you don't know where you're going, you ain't going to get there. And start with the goal. What do you want your money to do for you? And what do you want the process of risk management? How do you want that to serve you? A lot of older folks who are retired, they're bored stiff. So they're looking to engage with the market because they're bored. So they just need a time suck. And I say, there's nothing wrong with that, but just be aware of it. Because you can read all day. You could learn about asset classes. I have a bunch of great books. I can give you a whole bunch for free. Just know what you're doing it for. Be really that honest with you, with yourself. So I say, follow your feelings. They say, your feelings always try to betray you. I don't really feel that way. My feelings help me. They act as protective warnings. And sometimes if I feel too cautious, I really investigate that and say, okay, well, why am I cautious here? What is the evidence that I can see? Fear being F everything and run. And hubris being like, I'm unstoppable, I can do anything. And, some of my biggest losses came after big winning streaks, because of course, I'm a guy, I felt invincible. And I had to learn how to calibrate that feeling and say, okay, I can't fall in love with my own reflection like narcissists. I can't read my own headlines and believe that I'm onto something just because I'm popular. I have to listen inwardly, feel my feelings, but then ultimately execute my rules, because wealth accumulation and wealth maintenance is a behavioral thing. Behavior predicts where you end up in life. So know what motivates the behavior. Is it a feeling of less than, or is it a feeling of abundance? It's a whole deep process. It's not anything you could learn overnight. People are sitting there going, wow, I thought trading was just about buying and selling stuff, but it seems like it's a much more involved process. Yeah, because we have it built in. It's primal, fight or flight, right? Risk for a lot of people is like, what? I'm going to get out of here. I'm running down the street. I don't want to be near it. I want to go to where it's safe.
Like a crazy person. Yep.
So you have to think like risk isn't bad. If you're trading with leverage, like my foray into trading was through commodity futures, and all of those positions are levered because that's just how they trade. Everything is done in a margin account, and you learn very, very quickly that you cannot trade those instruments, gold, sugar, cocoa, that cotton, that kind of stuff, unless you use protective stops. And those are orders that you can put in that act as circuit breakers, so that if you buy something and it goes against you, you can offset the position right away. If you sell something short, anticipating a downward move in a profitable situation, you can put a buy stop in above it, so that if the market reverses on you quickly, your order is already on the floor. so you can buy it back and offset the position. So these are all tactics. That's really easy to do. If I want to reheat my food, I take the lasagna, I put it on a plate, I open up the microwave, put the plate inside, make sure the glass thingy is going to rotate properly. I close the door and I hit 2. And then I feel it. Is it enough? Do I need to give it another 30 seconds? Another one. So trading is not terribly difficult when you know what the rules are. But unfortunately, when you watch TV and mass media, they are marketing things to you that are really good for them, but not necessarily good for you. Case in point, advanced charting packages. David, there is no such thing as an advanced charting package, but it sounds good. And I can charge a premium because I anchored in your mind that it's advanced. And I'll tell you something, I wear Golden Goose sneakers. I'm not dealing with intermediate or beginning stuff. I'm dealing with advanced. So they play to your ego. And I'm not saying that I'm poo-pooing Wall Street, but you have to really listen carefully and figure out what are they saying to you, but why are they saying it? You know, you don't need to be Jim Cramer in order to manage a stock portfolio. You need to know who the heck you are, right? And what are you doing it for? Is it to accumulate wealth, or is it to look smart in front of people so you can brag about stuff? Guys being guys, it's a little of both at the beginning. At least it was for me. And then I realized, like, man, trying to peacock was a very, very expensive proposition emotionally, because deep down I knew that I was a loser. And for every winner that I could peacock about, I had more losers frequently. I had more frequent losers that also, when you added them all up, were bigger dollar values than the winning trades that I talked about as a peacocker. So I gave up, I stopped worrying about what people thought about me. I stopped caring about all of that stuff. And that was, man, that was a relief. I was Atlas shrugged. I just let go of all of that. I wasn't one to join frats or want to be part of a popular crowd. I'd rather be the idiot that no one liked, but be independent and be free, than to be popular in a group of other people and then lose my individuality. So there was a lot of personal growth in all of that stuff that came about in and around managing risk. Why? Well, because the market is a living, breathing mechanism with which you have a relationship, and there's ways to do it. You can just be super trusting and be an investor, or you can be a little bit more curious about your partner's behavior and learn to manage the risk during the day. And when they say we're just friends, sometimes they are. Sometimes they are F buddies, you know, so that there's lots of ways to look at the risk. You just have to listen closely. People will tell you what you want to hear.
People always tell you what you want to hear. And it's so funny. They're always selling that. I love what you called, advanced charting. There's so many people, it's like Jim's indicator shop, and it's like I've watched, there's a great video that I'll watch at night. I like watching other people's breakdown of like systems, and there's this one guy on YouTube that I just love. He breaks down all these systems with all the indicators and everything else. And I can tell you, every indicator is a derivative of the same indicator, okay? No matter what. That arrow that comes up that's magical on somebody's thing, the reason why that person makes a lot of money a year is because they believe that that arrow is magical. The fact of the matter is, it's just a programmed algorithm that you can get on Thinkorswim or any of the other things, but this person believes it. And that's something that I think in life, we are successful in life when we believe our indicators, right, whatever that might be, work for us, So I had a really good conversation with a trader friend of mine the other day, and he says, do an experiment one week. He goes, just buy over the 37 EMA and go short under the 37, right? He goes, no, make it to 42 and a half, right? He goes, just go and do it, right? So I'm papering it, right? And at the end of the week, he goes, what did you find out? I said, I made a lot of money, right? And he goes, I told you. He says, none of it matters. What matters is that whatever we believe in, we have to believe in it wholeheartedly, that our soul believes in it, because and that's the beauty of life, right? Is that everybody in life has a choice to live it their way. And as long as you have rules, and long as you follow what works for you, you'll be successful, and no matter what it is, because trading is no different. There's just, somebody can go short and someone else can go long, and it really doesn't make a difference. They both could be right. And that's the crazy thing about it. And that. It's like, what are we willing to do and risk as human beings? And what are we willing to follow? And if we believe in the way we live our lives, and I used to say this in my seminars all the time, there would be guys that would quote me. And I'd be like, you quote me all the time. You could teach this seminar, but you don't fucking believe it. And until you believe it, and then they're like, well, am I right? Am I right? I said, you don't need the validation. You just need to believe it, because if you believe it, it will work, because everything works in life if you believe it. And especially if you look at trading or women or anything else, I mean, everybody's following the same charts, the same moving average, the same thing. Everybody knows the same plays. This is all just self-fulfilling prophecies. This is all life really is. And I think that's the biggest thing. And I think when we get older, because I'm 59 now, you can't tell a 25-year-old that, because they look and they go, oh no, I can have control. No, you have no control. None. Just take what life is willing to give you and be present in the moment. And if you're present in the moment and take what life's willing to give you and follow your own set of rules, you're going to be successful no matter what you do. It's amazing. It's like all those years and all that ego, when I was in my 20s and 30s, and it's like, I got to be the rule breaker, everything else. And I realized as much as I was breaking rules, Michael, I was actually following my own set of rules that were working for me. I wasn't breaking
there's a lot of wisdom in that, because again, you're learning a lot about yourself. It doesn't matter whether you're rejecting authority or acting like a rebel or just being reckless. That's how you get to calibrate your system, right? So you're out there and it's life on life's terms. I will say this along those lines, like a lot of professional traders do set overall circuit breakers on their equity, right? Because that's the leverage that you bring to the game, is your account balance. We call that leverage, right? Because you're either trading 100% of your capital or trading many, many multiples of your capital, depending on your style. And your style, for those of you that are watching, will be as unique to you as your fingerprint, because it's based on how you feel about making and losing money. Most of this is about emotional intelligence and what we, in a great bigger chapter of the book called Trader Psychology. And you get to determine how you want to do that. A lot of the pro traders, when they were coming up and building their track records, they would make rules that they would live by to further, guarantee success, even if they couldn't foresee that far out. Because again, all we have is the ever evolving moment of right now. But they would say, again, for the aggressive traders, they would say, I am never going to have a minus 5% week. So no matter what I do, no matter what I trade, or no matter how I do it, I'm never going to have a Monday through Friday period where my 100K is worth 95 at Friday's close. If I'm down 4.5 on Wednesday, I'm literally going to stop trading. I'm going to take Thursday and Friday off. I'm going to come back Monday with a fresh head. Because what ends up happening in that period of time is, yes, it's true that the broken clock is right twice a day, but there are times when even my trading style is not amenable, or the market is not amenable to my style. That's life on life's terms. I can manifest what I want, but I also am powerless over the outcome of any one particular trade. So I have to subvert my ego and say, okay, not today. I got to come back tomorrow. The other thing that they can do, and Paul Tudor Jones of Tudor Investments did this, is he never wanted to have a minus 10% month. Why? Well, because his peer group had these very erratic rates of return. And usually when you're a pro and you're going to go market yourself, they want to see a capsule of your performance by month, plus minus whatever you did, then for the year, then ongoing, and this and that. And he made it up in his mind is that when people looked at his performance capsule, he never wanted to have a month where he was down 10%. Because as an active trader, he wanted to outperform buy and hold, but he also wanted to look better in the eyes of potential clients than his peers. So in the same breath, he might be down 8% by the second week. Then what pros typically do is they'll take their 100K, and if they're down 8% at that point, they'll actually take a haircut on their capital and they'll trade it as if it's even smaller. So let's say I'm down 8% on 100K, I'm at 92. I'm not starting week 3 with a $92,000 balance. theoretically, I'm trading it as it's maybe 60K. So now my risk unit as 1/2 of 1% of my capital is based on the 60K. This
Mm,
helps me stay out of my ego when I'm in a losing streak as a trading rule, so that it kind of cuts my drawdowns, right? Drawdown is when you start to lose money. There's a magnitude and a duration. We talked about IBM. It went from 140 to 40 and back. So that was a big
10 years.
percentage pullback that
Yep.
lasted 10 years. That's a drawdown, right? You want to know that. That's what pros focus on. They want to avoid drawdowns. They want to minimize them. So when they start to lose money, they come to the realization that for their style, their temperament, their personality, which is really what this is, because again, it's a relationship between a living, breathing mechanism, that they're not necessarily off, but the market is not amenable to your way of doing things for that moment of time. Now, you can be in your ego and try to bull your way through it. You can double your positions to try to win it right back. Chances are you're going to get smashed and you're going to lose even more. Now you're bitter and you've got regrets and you're probably going to blame it on something else. But ultimately, we live in a paradigm of personal responsibility. And if you make money, it's your fault. And I say that deliberately. If you lose money, it's your fault as well. So you need to know what is your risk unit size? What can you live with emotionally and financially? So you take a haircut on your capital. That helps you preserve your capital, because pros want to play superior defense. If they can last long enough, sooner or later, just like you have 4 seasons on the East Coast, the seasons will change. Summer, spring becomes summer. Yeah. And the markets will change. Just your style, your trading methodology might come back in favor. And then now you can show up for the miracle. But if you blew up your account, a lot of things happen. You take 100K down to 25 because you thought you're going to roll the dice on Bitcoin. Now you've not just lost money to the point where you need to multiply it by a factor of 4 just to get back to break even. You've lost your nerve. You've lost your confidence. You've lost your self-esteem. And that's the worst part of it. The money you can always get back. But if you lose your confidence,
though.
Pardon?
Not when you lose your nerve. When you lose your emotional nerve, you 100% right. You can make the money back, but if you lose that, and you said it in one of your podcasts, which I think was great. If you're beaten up emotionally and you lose your nerve, you could lose $2,000 one day. But if you lost your emotions and nerves, you can't make it back you may not make it back for weeks. If that was the punch that kind of knocked you a little more woozy than the other punches, so you're right. Yep. It's the emotional capital, I think, is the biggest thing, because money is an energy, but emotional capital is what we, as human beings, when we are emotionally drained or our emotional capital is drained, you can't, and if you're down to, you have $100,000 account and you let it go down to $25,000, the amount of emotional energy to get that account back up to 100, you are fighting just to get back to even. I mean, that's when you need to really take a break.
I refer to that as shoveling sand against the tide, right? There's a point where, like, if you're trading and you got losses, maybe you have 2, 3, 4 losses in a row, that might be 2.5%. That's when you want to take a time out, because the market is communicating back with you that it's not ready. You want to get serious, you want to move in, and she or they are saying, it's not the right time for that. Let's keep things going the way they are. So then you have to learn to sit on your hands. It's interesting and coincidental that you need to do the same thing when you're winning. Most of the folks that I looked up to who eventually became friends and role models to me wrote in 2 really, really good books. One is called Market Wizards by Jack Schwager. Then he did a follow-up book called New Market Wizards. Time and time again, the folks who were interviewed for that book said they made the most amount of money when they learned to sit on their hands. Case in point, if you go back 18 months, you'll see that Tesla was trading at $100. Then it went to 3. Then it went to 450. Then it went to 9. And so the more active folks might sit back and peacock and say, man, I bought it at 100. I sold it at 2. I doubled my money. Back and say, that was a great trade. Congratulations. I know how that feels. It feels good. But how do you feel about the opportunity cost of having cauterized an otherwise winning trade and missing out on the other 700? So you also learn that when the market is showing you that your favor is in style and the thing is going up, to not offset an otherwise good trade and sit on your hands and let the market do the work. That also means you don't impose your will on the market. Stay out of your ego. The market has much greater force in terms of duration and magnitude than you could possibly fathom. So stay out of its way. When it's going against you, fish or cut bait, man. I get out, I go to cash. I can think with a clear head. I don't have to worry about stuff and obsess and then scatter. It's going to be on the news and Twitter and stock twits, and it's all very good stuff. They're very, very smart people, but that doesn't help me manage risk. And if I bought it 20 and I'm at $19.10, I'm 10 cents away from where I'm going to get hit and get stopped out of the trade to minimize my losses. I don't get to renegotiate that. Please don't ever buy more when it goes against you. You don't average down. If it goes to 18, don't buy more and say, well, if it goes back to 19, now I'm going to break even, because 18 is going to go to 15.
Oh yeah, and 15.
And you talk yourself into doing something that's actually bad finance. So if you want to read up on this, read about martingale and anti-martingale systems. There's enough literature out there for free where you could learn about it. But you don't want to average down on losers. If you're losing money, get out. And if you want to have a big,
Michael, as you know, just take a look at GameStop.
Yeah.
You know, or Tilray. Remember when Tilray, Tilray went to $200 or $300, and what's Tilray now? $17, $14 stock. I mean, you're right. Average.
There's the OCGN that was going to be part of the COVID thing, and I don't know it. I don't have a position, so it's not. I don't have a dog in that fight. But the best thing for anybody to do, man or woman watching the show, is that when you know ahead of time. See, that's the beauty of meditation, about journaling and having an open conversation with someone like a loved one, a partner, a coach like yourself, or someone who, I don't really coach on relationships and stuff like that. I talk to people about it, but I don't do it professionally. We really, handle money for, family offices and those types of folks. But then I also teach people how to do this on their own as a way to give back to the community. Coming from where I come from, it's just really good karma. I want to have a full karma bank. So the more I give away, I have a special little treat for the listeners I'm going to get to by the time we get to the end of the show for the folks watching today. Ultimately, you have to keep your losses small, and you cannot renegotiate with that level. Case in point, you're in a relationship, you're thinking about starting a family, you're either going to procreate, you're going to adopt, you're going to have a surrogate, doesn't matter to me, but you're going to have a family, and it's going to be your little nuclear family. Congratulations. I support it. I think it's great. What I know from having been through the process is that you can never be 100% ready. There's never a perfect time, but obviously you have to communicate and what the process is going to be like, right? If it's a man and woman, meaning, assigned female, assigned male, they know how to twist and shout, make it happen. If it's, same gender, same assignment, whatever it is, there's other moving parts that have to be spoken about, and good relationships are about good communication. Ultimately, when you're managing money, though, you can calibrate your own emotional system to say, okay, when I look at having a 1 or a fifth, what we would call a 50 basis point or a 0.5% risk unit. So I have 200 of those in my portfolio at any given time. How do I feel emotionally about losing 0.5 or 1% when I'm really I love Tesla. I love the technology, or better yet, I love Uber. I love Airbnb. These aren't the gender or non-binary people that you might be attracted to. They're just waves to surf. The minute you fall in love with them again, you've lost your objectivity. You have to be very, very cold-hearted. I don't mean to get into it this way too, but when you think about like a cheater, if someone cheats on you, maybe you get back together, you understand what's your part in it. I don't know. That's very complicated stuff, but the relationship is never really the same because they can't take that back. It's already toothpaste out of the tube. And so I'm very regimented and hard-nosed and puritanical about managing the risk. And it's not like I sit there and say, well, I bought the stock at 20 and it didn't have the courtesy to go up. Who the hell do they think they are? Not just as a CEO, as a company, and as a group of market participants, because I have entitlement issues. The better thing to do is to say, I buy it at 20. Granted, 1 out of 20 is 5%. So it's a bad example when I'm saying 1/10 of that. But If you're risking 0.5%, you know what that number is ahead of time. And that is actually what gives you staying power. Your winners will only look like winners to the extent that you keep your losses small. Because just by dumb random luck, you can throw darts and find some of these big multipliers that grow for you. And it'll happen if good timing and good luck, and you'll take them. But it would be a damn shame if you had a portfolio where you bought a unit of Bitcoin and it went from 1,000 to 60K, but everything else in your portfolio was down 60K. You know, what is the point of that round trip experience? Intentions equal results. So we learned the hard way. In my case, it was 4.5 years of learning how to behave consistently to never let those losers
Get to you.
or wipe out my gains. Because
Yeah.
whether I got there by good luck, good timing, or good analysis, I can't let my losers offset the abundance that I want to invite, because you really invite it all. You need to take the opportunity, meaning the instances, bets. You need to take the risk. Because with that diet of risk that's appropriate for you will bring the requisite payoff. You only get to learn that by doing it. You can see it theoretically. You can put it on Google Sheets and all this kind of fun stuff and see the math. But you have to feel it. You have to live it.
It's interesting. I have a basket of stocks that I like, and I patiently. There's one I love Roku, because it has a $150 range, and it's at the bottom of it's sitting at the bottom of his range right now, and I'm just sitting, waiting and waiting and waiting.
Yep.
And waiting and waiting, because you're 100% right, because it's going to take its ride back up again, and then it's going to take its ride back down again. And the beauty, I think, and in what you're, and what you practice, and I just like the energy you throw out there, is that when you know what you're going to risk and you wait for your opportunities to come, you'll get that full. It's like the Bitcoin example you just gave, somebody who, because they were because they let Bitcoin run from 1,000 to 60, but they were doing all that noise in between, so they didn't even get that. So when I look at like my retirement account, I look at it this way. It's kind of been flatlining for like the last 2 months, because that's basically the market's been like, and I'm just kind of waiting for the fall. I'm waiting for the pullback. I'm waiting for what I feel is going to show up, right? And in the meantime, I'm just kind of just making sure it just kind of stays, doesn't go down, goes up a little, stays the same. Because what I have in my plan is I have things in my plan that I'm watching, and when that hits, I'm just going to go and enter, and I'm going to go like this. Because that's the exact example that you just gave. Because when you go and you get something and it's so good, but yet you're filling it with so much other noise, you don't even get to embrace the fact Tesla went from 100 to 2,000, whatever, I mean, before it split, right? Because you're filling all the rest of it up with unnecessary action that doesn't need to exist. Because the money that we make, or the beautiful moments in life, are when we sit there and we can say to ourselves, not happening today, not doing anything,
Go do something else. Go to Literary Row in Central Park and sit there and people watch.
Yeah.
I totally get it. I mean, I can admit to having almost a romantic relationship with certain names, especially the quality names like GE. There was a time, 15 years ago, that Jack Welch was on CNBC every other day because of his management guru status.
I remember all that.
Yeah. And then what did he do? They replaced him with Jeffrey Immelt, who drove the company into the ground to the point where it was below $10. And it was delisted from the Dow Jones Industrial Average, of which there's only 30 names in the components, right? So that's why you cannot fall in love with these names and fall in love with the gurus. All you have is the ever-evolving moment of now and the price. The price will tell you everything that you need to know. If it's going down, It doesn't matter what your guru is telling you. There's more sellers than buyers. And if you know ahead of time what you're willing to risk in order to get the gain and it's going against you, see, the better trades are going to start making you money right away. That's typically
Always.
how it works because of what we call momentum.
Yep.
There's an old saying from the floor too, that the worse the fill, the better the trade. Meaning like you wanted to buy at 20, but there was so many other people buying at 20, you got in at $20.25. Now that would be a lot of what we call slippage, the distance between where your order was and where you actually got filled, what your execution price was. But the good news with that and why that statement is generally true is because the institutions were piling in and buying right with you. The good news is that they tend to want to support their position. So on any type of weakness as it comes down, they're going to come in and hammer the market more because they've got size and scalability. And most of you watching do not. So it doesn't matter what Jack or Jeffrey or Jim or any of other gurus think about a particular name fundamentally. The price is the only thing on Wall Street that's going to tell you the damn truth about the instrument at any given time. And you have to manage risk in the moment of now. I can't manage risk next week, next Thursday, because I don't know what the price is. So I know what it is now. And I have to act intentionally. And my goal is to always keep my losses small. If it turns around and goes back up, I could always buy it back, get this, at a higher price. And if you understand that, you really understand the inner workings of how to make money. Outside of diversification, the next thing that you need, which is like right there, right with number one, is momentum. There's only three things that can happen when you buy an instrument, whether it's an option, a commodity future, foreign exchange, a cryptocurrency, a stock, doesn't bond, mutual fund, ETN, ETF, exchange traded product, rights and warrants, doesn't matter. It's either going to go up, it's going to go sideways, or it's going to go down. In only one of those instances do you actually make money, where the market is now in harmony with what your intentions are. In fact, a lot of pros use what we call a time stop, where if you buy something at 20 on Monday and then Tuesday, Wednesday, Thursday, it's still around 20, momentum is stalled. So they offset the position for neither a gain nor a loss, because you always have the downside risk. So in that case, your timing was bad. I know it must sound really, really weird, but the pros are always trying to figure out, where are my blind spots? Where are my blind spots? I know I can make money when I add risk to my portfolio because there's a correlation to reward and risk. They go together. That's the whole point. But where I'm going to get hit hard is where I can't define my blind spots. And we all have them.
We all have them. You know, it's interesting too. I learned when I was learning how to trade, I learned from a guy who, you know, does really well in the first hour of the day, makes tons of money. And you know what his rule always was, Michael? He got in this thing in one bar or two bars, did not move fast in the direction that he was. He would get out for a small loss or a small gain. And he always said, he says, I can get back in 2 more times, 3 more times. He goes, it's not my thesis. It wasn't the time. And he would get in at a higher price. If he was shorting, sometimes he'd get in at a lower price. But he always says that you're getting in for one reason, for it to go in your direction, not to go and for you to watch a panoramic view of a chart moving sideways, because the longer, you know, that longer it moves sideways, it could go either direction.
Yeah.
When it breaks out of that box, it's going either direction. And the fact is, you don't want to be a part of it. You can go put your price in and take a walk and have a trigger.
That's hard.
Yeah.
That's really hard when you see Elon Musk on TV and the stock you're talking about is Tesla. It's really difficult when it's like whatever fractional interest or number of units you own of your favorite cryptocurrency, because now you're emotionally invested. And I always think of the story as really the narrative. It's what you want it to be. You can talk yourself into anything. But the number one thing, I'm going to say it again to the point where you want to X out of the damn video, is you have to keep your losses small. The ticker, the sex appeal of the opportunity cannot blind you from keeping your losses small. It's the single most important thing that you can do. You cannot fall into a trance because of the ticker or what you think the future promise is. Now, if you're in love and you really have something going on because you come from computer coding and systems and this and that, and you understand the blockchain, that's great. But take the smallest amount of capital that you possibly can and put it in and leave it for the long term. This way, the zigs and the zags won't keep you up at night, right? because you have to have your position sizing down to the point where you can sleep at night. If you're constantly looking at stuff and you're micromanaging things, you're in too deep. And that's a tough spot to be in for the long haul when you're managing risk. You want to have the Quan, you want to be the Sultan of Quan. You want to be in the
Yeah,
zone from Jerry Maguire, right? You want to be,
that's one of my favorite movies ever. Well,
right?
you and I have talked a long time,
Yeah.
and I mean, I hope people really got a lot out of it, because I got a lot out of it. I really enjoyed it. And I know people's attention span. So, Michael, are you managing money now? Are you still
Yeah.
trading? What is your, tell people what you do? And also, by the way, I know you've got I've been getting emails about a coaching program you're doing and everything else. And you've got this great free audio book. So give people a little background about what you're doing. Are you money, because I never even asked if you're trading or money
Yeah.
managing or anything. So this is your time to tell, and let people know where they can find you as well.
Right. So it's more on the family office institutional side of the money management game. I'm not really, because I don't want to be in client service. And ultimately, if you work at a wirehouse kind of a deal, the phones are always ringing and you can't act with discretion. You always need the client's permission. So when you do things on an institutional level, you kind of get that permission up front, blank, and then you go do what you do and you make that person the money. And they figure like you're going to be put in a stable of horses, and everyone has to play nice in the sandbox, because they're never going to live and die by how one person acts, how one person manages the money. It's really a portfolio of different styles, so that when you add them all together, 1 and 1 equals 3, right? So I do that. Right now I have three clients. I like it that way. But I also teach other people how to be like me, which takes time. It takes a lot of money, takes a lot of effort, but it's for real. It's not from a book. It's not $97 either. Like, I'm a premium service provider. That's the way that it works. I'm not for everybody, but I cut right to the chase, and I show you what you need to know. So we do have some one-on-one coaching. There's a big comma in the number. So again, it's geared for professionals. There's a group coaching thing that's more of a, dynamic. It's a little bit more affordable. It's limited to 6 people, only because I think at that point you start to crowd people out. I could make fortune by opening it up to everybody, but then it's a cluster shizzle, and I don't want to do that either, because then it really robs people of their opportunity. And I want to be able to have a relationship, because the better I get to know somebody, the better I can really start to understand what makes them tick, even if they cannot. And then when we do our weekly one-on-one calls, I can speak with them with candor, but in a loving way, to say, hey, I'd noticed about you on this. Were you aware of this? Or I noticed when someone does this, or if the market behaves this way, this is how you react. Is that intentional? Because intention equals results, right? So that's so we do some coaching that way. It's a way of giving back. I think it also shortens the learning curve, because we don't deal with any of the nonsense that doesn't matter, which are kind of like the honeypots, right? They're the traps that the retail investor and traders fall into. As you mentioned, I did write a book in 2011, 10 years ago, called The Inner Voice of Trading for Financial Times, FT Press. And as I run my daily podcast called The Michael Martin Show, it's on Spotify, all over the place. I do that again as a way to give back. It's an open kind of conversation with myself about the things that I know from an emotional intelligence, trader psychological level, that I either had to live through or I'm considering now. And I share it with the world for free. I also have the audiobook version, because the publisher was only interested in the digital and the physical copy. They didn't care about the audiobook version. So what did I do? I used this damn microphone and I recorded the audiobook version of the book, and I actually give it away. So what I did in anticipation is a way to kind of show love to both you for having me on, and anyone who sat through almost 2 hours of my blathering, is I want to give everybody who cares a copy of it for free. It's probably $20, $30 value if you look at what audiobooks go for. If you go to Martin Chronicle, and that's MARTIN Chronicle, KRONICLE.com/David, you'll see a download page. You enter your first name and your email, and I'll send you the link to download the book. It's a couple of hundred megabytes, but it's free. It's very insightful, and it talks about my journey. It's not a how-to book, it's a how-come book.
I like that better.
Yeah, because no one needs another how-to book. I will also
Oh,
share with you over that period of time, I was done. The book came out around September of 2011. And so over that period of time, I made a lot of money in the markets, but I only talked about my failures and what I learned from them. And I did that deliberately because I found that the how-to books just gloated and look at this trade and look at this trade and look how much I made money here and look, and that doesn't really teach me anything, right? Because it's like you work for, 10 years to figure something out, and then you have overnight success on the first day of the 11th year. Like, so I
I
kind of
know.
showed you.
That's what it feels like, but it's not. It's like the actor, Michael. It's like, the actor who all of a sudden they go, man, this guy's like an overnight sensation. Yeah, he
Yeah.
was shoveling shit for 8 years. It's not. It's like it's never overnight sensation. And I love and I got to comment on this before we wrap up because it's the greatest thing that a friend of mine who's such
Mm.
an LA person goes, oh, you're hard on yourself. It's like you dive too deep into the things you did wrong. And I look at him and I go, how the fuck am I going to learn? It's like the beautiful mistakes that I make on a daily basis is the only way that I'm going to be an overnight sensation whenever
Mhm.
that overnight sensation happens to come. But if I ignore these lessons, they're just
Yeah.
going to repeat, repeat, and repeat, and repeat, and repeat. And that I love that
Yeah.
you said that because so many people, I used to argue in LA with people like that. They would be like, oh, talk kinder to yourself. Well, I talk kind to myself. I do meditation. I meditate like a
Mm.
maniac. And you know what? Sometimes in my meditation, when I'm talking about the present tense, my voice inside my head goes, hey, you're not really there right now. It's
Yeah.
like we got to work on some shit.
Making and losing money is intentional and it's behavioral. And so you can
Yes.
find patterns. Oftentimes people, you have to remember you have your conscious mind and you have your subconscious mind. And so if you keep saying to yourself, man, why do I keep finding myself in this situation? It's because your subconscious is your behavioral programming and it's predicting where you're going to end up in life. So that's why you have to really look at your behavior. When you study your failures, you could find patterns and you could say, oh, this is my trigger. This is how I get in. Sometimes it's financial, sometimes it's emotional, sometimes it's both, but you only get to see that if you're actually doing it.
Right.
So you have to be willing to kind of jump in there and get dirty, make it messy. I mean, it's your life, make it messy. The stuff that you'll learn in the process is amazing. And I figured like, look, between Soros, myself, Paul Tudor Jones, Stanley Druckenmiller, any other famous trader or money manager that we all have one thing in common, and that we've lost a lot of money. And that's one thing that we can say, like, how did we grow as people is we studied our losses and we started to eliminate the things that led us to lose the money in the first place. And we tried to minimize that. Two, just for everyone's knowledge, I want to be frank with you. At this point in my life, 34 years of old age, I have lost more money than any of you will ever learn if you add all of it up together. And I'm still standing. Why? Because I learned to keep my losses small. So you might have gotten kicked in the head. You might have had bad timing. You might not know what you're doing, but pat yourself on don't break your arm doing it, but pat yourself on the back for at least being in the game and trying it, because it's in the doing part that can be your best teacher. If you want help, for sure, reach out because nothing else, I'll point you in the right direction. But nothing's going to teach you better than the act of just doing it. And I'll say that.
I love it. And that to me, you can't get a better final thing. So, I will have Michael's information down below, martinchronicles.com. You can check them out. I mean, it was awesome to connect. I'll say goodbye to you I'll say goodbye to you off the show. The rest of you, man, this was long, and I hope you will listen to the whole thing because there's some really, once again, even if you don't care about trading, you can take any of these tidbits and apply it to any aspect of your life because in order to succeed, you're gonna lose, you're gonna get dirty, and you're going to have to do a self-evaluation. I mean, every night I do a self-evaluation and it's called my honesty moment, and
I
I
do it too. I do
I
it too.
do
I
it.
walk my dog and I'm like, did I win the day?
Oh yeah.
Even if I lost money, I can say yes, because everything I did was predictable and it was within model. I don't mean to cut you off, but
Oh,
yeah.
no. I got one screen up to my right and I'm sitting here and I got to take a picture of it because it's CRM, Salesforce.com, which I don't know why they call themselves CRM, right? And it is what I call the ultimate, just a beautiful end of the day short that when I was in it, I didn't catch it because I didn't get filled, right? And it's that picture because I take that picture and underneath it, I print it out and I write to myself, this is your play. right? It
Mhm.
doesn't matter why I missed it in that moment, what I was
Yep.
battling, what I was going through. I wasn't grounded in the moment. I know what I was grounded. I was trying, you know what I was trying to do? I was trying to be the New York Jew that I am, okay? And I was trying to nickel, and I mean, I'll be 100% honest, right? And I'm gonna leave it at this. I was trying to get filled on a 10-cent spread stock at the ass to go short, right? Instead of hitting market, I was trying to get in on this. I was trying to get in on the number I wanted. And the thing went, if I look at it, it went from 272 and 50 to 267.84 in not even an hour, 45 minutes. And I was trying to save, Michael, 10 cents. Now, where did that come from, right? You know, why did 10 cents? I mean, my thesis was right. I knew
Yeah.
what he was doing.
Yeah.
I watched it on
I
multiple
know the
times.
answer, but go ahead. You
I
got to
know the
say it.
answer. It came from, you know, I know the answer. It came from my grandmother, my grandma Rose, who was a Polish Jew, left, you know, left Europe during between World War One and World War Two, grew up in Queens, okay. And when she moved to Florida, she would make me dive underneath at 17 that I was under 12. She'd make me go there so she can save $1. We'd go out to dinner at 4 o'clock, and it came from my mother and it came from my father. So I was sitting there trying to just save. Hey, you know, you got to save the $10, right? I mean, 300 shares I was going to do. I was doing a small position times $5. You know, you can have a nice little $1,500 paycheck at the end of the day that I did not receive, and the universe was willing to give me because I was there, because I was trying to save not even 2 Starbucks fucking lattes. Okay.
Environment, man, environment. It's
Yep.
not, it is what it is. It shapes us in a lot of ways. We pick up these things, and the good news is that you can reflect on it and go to school on yourself, and you're your own best teacher. You know, you're a
Yep.
terribly insightful guy, and I want to congratulate, you know, your viewers. You've accumulated quite a bit of viewers. They're very much the wiser for being part of your tribe, man. And I'm glad I got to meet you, and I'm grateful that you invited me, you know, on your show. Whatever I can do, you know, we're all in this, love one another, because
Yep.
world's a
Great.
difficult place. World is a difficult place, and you know, that's why I'm just like, man, I'm going to give it away. I'm just going to help everybody, because I do believe in the think and grow rich thing, like Napoleon Hill. The more you give away, the more you get. And I don't need, the way I deploy that, then we can hang up here, is if I do a favor for somebody, I don't need that person to pay me back. I did when I was 18, but I believe that the world is an abundant place now. It's always been abundant. I just wasn't tuned into that frequency, right? So now it's like, I know the abundance is going to come from somewhere. It might not come from the very people that I'm helping, right? The majority of people listening to my show, I don't even know them. A lot of people write in and I love it. But the majority of the people I don't even know. I don't know that I'm helping, but I'm doing it anyway, because I know that even if they don't become clients, or if they don't want to, you know, even listen to the audiobook, my intention is to be loving and to be helpful. So all of that comes back to me. It's great. It's been great. The past couple of years have been great. It's an enormous amount of work, because I record and it's like, hi everybody, it's Michael Martin. Thanks for being here. Like, this is where I do it, dude. Like,
I
this is
know.
it. And I do my own, you know, noise reduction. I upload everything. I disseminate it. I do the social media. Like, it's a lot of work, but you know, people need help. And the amount of information that they're getting from, I don't want to call them nefarious characters, but agents who don't have their best interest in mind, is vast. They're all carnival barkers. And I just learned that you can't trust any of them. They all have an agenda.
Oh man, we can go into another 2-hour conversation about the carnival. I call it all the furus out there, the carnival barkers and stuff. And people ask me, you know, you're great at coaching. You know, why did you want to trade too? And I said, you know, I
Mhm.
wanted something that I can make money every single day at and be in control, no matter what the economy,
Hundred percent.
no matter what. And that's why I put myself
Liberty and autonomy. You don't have to
exactly.
take stuff from anybody. You're your own boss. You know, it's not for everybody, but you get to live the life that you want to live.
And I
You
want to
don't have
give
to
back.
take,
And I want to give back because everything,
yeah.
Michael, every single thing that I'm learning in trading and my journals that I've written are going to be my audio book. When I
Yeah.
when I
Love
get
it.
when I get past my blocks that I'm very well aware of right now that I face every single day, I want to give back and I want to teach people and show them because there's to me I feel people need to live an incredibly abundant life in every single aspect. And the market reflects the ultimate form of abundance, because with abundance comes lessons, comes losses, comes, it's just a powerful thing. And I want to be able to help more people really get past all that, because I help them date, and meet, the opposite sex. Now I really want to help them get past their own financial blocks, because we live in a world where the government takes away and tells you who can come into your restaurant. I'm sorry, you're not vaccinated, you can't come into our restaurant and eat. Oh wait, you can't fly on an airplane, you can't do this. The government is telling us now what to do. So you know what? Making money and being in control of your own money is more important than ever before. I think this is a time in your life that you want to be more in control of your own stuff, because it's the only thing you can control. The rest of it, there's just so many rules and regulations being placed. Now you don't even know what's going on. But anyway, Michael and I can talk a long time. I'm going to say goodbye to you off the show. The rest of you, thumbs up, pass this on to other people. Check out Michael's site. And I will see you all on the next video. I'll probably do something over the weekend. I'll take a hike. It'll be 95 degrees. The humidity be cranking. And I will probably go and talk to Source on the hike and share it with all of you. And Michael, hang out. I'm just going to stop this recording.